Hastings with Property Management Nashville. And I'm here today. I hear a lot about comparing real estate with stocks and bonds. And when I'm talking with owners, what I hear mostly is only one facet of the ways that or the benefits of owning real estate versus stocks and bonds. That's a big one, but it isn't everything. And when you combine, it's pretty amazing, sort of what that looks like. So there's four wealth building benefits of owning real estate versus the other. Okay, benefit number one, and that is cash flow. All right. So I'm going to assume that you're going to have $600 a month in cash flow, and that's after you make your payments, your operating expenses, things like that. That you'd have $600 a month, which is not at all unusual. $7,200 a year net cash flow. So now the benefit over stocks and bonds is predictable income, as long as the tenant stays there, yes. But assuming you've got a good property manager that is going to pick the right tenant for it, it's a predictable income stream versus stocks and bonds. Now, benefit number two, the tax benefits. You always hear about owning real estate and how you can have certain tax benefits. Well, you can deduct the interest. Even though it is an investment property, you can deduct the interest, the taxes, the insurance, the repairs, and of course the property management fees as well. So, and depreciation, a non-cash expense, amounts to just say on average for a $400,000 investment property, $11,600 per year. And then that often offsets all rental income. So the tax benefits are substantial. And so you add benefit one with benefit two. Benefit three is the mortgage pay down. Now, I know some of you are going to pay cash for the property, but most people, by and large, most of my customers do have a mortgage on the property. And so let's just say a $320,000 loan on a $400,000 property. So you put 20% down, you finance 320. This is the equivalent of a 13% return year on cash investment. So, or invested rather. So you're going to put 80,000. You're going to get so much paid down on your loan. It's going to equivalent to 13%. It's massive. So 400% total return over 30 years when you include mortgage pay down. And then benefit four, of course, is appreciation. We go through highs and lows in the real estate business, but for years here in Middle Tennessee, you can pretty well bank on 3% annual average growth through good times and bad times. You may have some times that it may go up 5, 10, 12% like it did in 21, but that's not the norm. The norm is about 3. So if you take a $400,000 property, that's $971,000 over 30 years. Okay, so that's over $570,000 value gain from the $400,000 property. So when you add all these up and you look at the comparison between stocks and bonds and real estate, you can see that here you're talking about a 24.6. When you combine all those four benefits into one, it comes up to just a little less than 25%. 25%, that's amazing. You can't get that hardly anywhere. Versus stocks on average, and again, I'm talking about on average here. I'm talking about an average price of 400,000, average rent, cash flow, and everything is going to get you 24.6. Stocks about 7%. Bonds about 3% on average. So there's four ways. Again, it's monthly cash flow, you get tax savings, you get mortgage pay down, and you get long-term appreciation. So why choose real estate? Well, just you got the multiple profit streams. It's not just one. You get benefits all the way around, stronger than stocks and bonds. and it's a proven wealth builder. Anybody, everybody should have some real estate in their portfolio. So if you look at the comparison here, the investment returns, real estate, including the pay down, is running just about 25%. Stocks are here, bonds are here at 3% over a 30-year horizon. So, and again, there's a breakdown of the 24% in the 4 categories. So, why is real estate different? Real estate is a tangible asset. Land and property always, they hold intrinsic value. Real estate is never going to be worth nothing. Okay, have you ever thought about that? Can the same be said about stocks and bonds? Companies fail, bonds fail, and that's a reality, isn't it? So over time, real estate continues to produce income. It has the utility. It has the long-term appreciation. And so there's other ways to look at real estate other than just cash flow, although that I understand that's something that you're interested in. If I can help with anything, my name is Mike Hastings. I have Property Management Nashville. Thanks for listening.